BATCHIMPIPS. I've been BATCHIMPIPS. I've been.
Hey, it's your man Charlie P. Today we're going to talk about my Pika 10 strategy, and let's just jump straight into it. Now, if you remember the last video when I talked about my hammer time strategy, I said the first rule in hammer time is the same as the first rule in Pika 10. And that first rule is actually, let me slow down. This is where we're looking for this example. Okay, so the first rule of Pika 10 is that H1 has to breach a sharp minor support or resistance zone. In this situation, you can see we're in an uptrend. At some point in this uptrend, we came to this sharp area of resistance. So I'm going to mark a line right at the top of that. As you see, prices came up, straight back down. That's sharp. At that point, it came back and H1 broke and closed past that area of resistance, that sharp area. So that's rule number one. Rule number two says after that happens, price is going to come down and we're going to get an H1 candle that closes just a little bit past the 10 EMA. When I say a little bit, what I mean is anything less than half of that candle body. I want less than half of the candle body peaking past that 10 EMA, but that's where the Pika 10 comes from. The H1 candle peaks just a little bit past that 10 EMA. At the same time, when that happens, I want the RSI 5, that's the dotted line, to be under the 50 level. I'll say under in this situation because we're looking for a buy. So I want the RSI 5 to be under the 50 level because we're looking at it like a slingshot action. It's going to come under the 50 and pow right back up to the upside. But when the RSI 5 is under the 50 level, it leaves the Ehlers-Fischer behind. So in other words, just the RSI 5 comes down here. Ehlers-Fischer needs to stay on up there. All right. So when you have those two things in confluence with each other, the confirmation candle peaking just a little bit past the 10 EMA, and at the same time the RSI 5 is under the 50 level, leaving that Ehlers-Fischer behind. That's rule number two being met. Rule number three is that the confirmation candle, which is this red one, it has to happen at a certain time of day. Now I've got the acceptable ranges of time listed in the rules for you, so I'm not gonna speak those verbally. You can see them on the screen, but in this situation, this particular candle closed at 14 chart time, which is equivalent to 7 a.m. in my time. So you'll just have to change that to whatever time zone you're in. But the chart time, so I said 14 chart time. So that's basically between my 6 a.m. and 9 a.m. time range, basically. But that happened at a proper time of day. So now our first three rules have been met. So once again, just a brief recap of the first three rules. H1 breached this sharp area of resistance. Second rule, this came down, closed just a little bit past the 10 EMA. At the same time, RSI 5 left the Ehlers-Fischer behind and went ahead and closed under the 50 level. The third rule is simply that this particular confirmation candle happen at the proper time of day according to my rules. The fourth rule is that we need to go to our reassurance template. So I'm going to switch templates here. And if you don't have my templates or my indicators, they are in the description of the video. So look down in the video description and you can download all of that. But I'm going to switch this over to my reassurance template, excuse me. And I need to go down to the 15-minute time frame. And we were on June 27th. All right. So looking at this rule, it just simply says the 200 SMA should be on the side of the 400 that you plan to trade in. These are simple moving averages. That's what SMA is for anybody who might be newer to trading. SMA is simple moving average. The 200 is my yellowish or gold line. And what color is that? I'm curious. Now I didn't say it. Okay, gold. So the 200 is my gold line and the 400 is the red line. Since I'm looking to buy on this particular setup, I would want the 200 to be above the 400. So that's all that rule is. If the 200 was under the 400, this would not be a valid setup and I would just pass it and let it go. So that's all that rule is saying. Just double check that. And then the last rule, now that everything is met, is we look to enter the trade. We enter the trade when M15 grabs the 50 EMA. Now, with this particular setup, 9 times out of 10, as soon as the confirmation candle ends, you're already going to be ready to enter the trade. Like as soon as the hour changes over, bam, you already on the opposite side of the 50 EMA. So, and when I say grab the 50, I should rephrase that. For anybody who's newer to my strategy, I always enter trades on the opposite side of the 50 EMA versus the direction I'm wanting to trade in. So if I want to buy, I want to make sure I enter the trade when price is under the 50 EMA. If I'm selling, I only want to enter the trade if price, like right here, if I was going to sell somewhere up in here, I want to make sure I sell when price is above the 50 EMA. That's just how it's just something I do. So in this situation, we had some opportunities. You could have got in right here, ideally, but then it gave you one more chance. It came back under the 50 EMA one more time, and you could have got in here, and you could have caught upwards of about 100 pips on that day, a little bit over 100 pips on that trade. The other caveat to that last rule as far as entering the trade is you do not enter the trade as if M15 is coming out of the bands. What I mean by that, when I say coming out of the bands, when price is coming down to your entry, it can't be coming from the bands. You see these dotted lines up here? Like, I'll just highlight them this way. Like these little dotted lines up here at the top. If M15 had come up and closed inside those bands before it came down to our entry point, we cannot take that trade. That's all I mean by that. And I'm going to show you an example of that later on. Okay, let's go to another example. I'm going to go way faster on this next example. But I just wanted to give a thorough breakdown of the first example. Now we're going to kind of speed through a couple more examples. So let's go over to another example. Now, right here, we're going to be looking on, in this area. Well, technically, let me shorten that up. We're going to be looking in this area here. Rule number 1, here's a minor area of sharp support. So I'm going to draw a line right there at the body where that body closes. Right here, H1 broke that area of sharp support. So rule number 1 is met. Rule number 2, it retraced up and closed shortly past the 10 EMA. That's rule number 2. And at the same time, the RSI 5 closed above, because we're looking to sell on this one, it closed above the 50 level, leaving the Ehlers Fisher behind. The Ehlers Fisher stayed down here. Rule number 2 is met. What time of day did this happen? Because that's rule number 3, is what time of day. This happened at 15 chart time, which would be 8 o'clock in the morning, 8 a.m. My time. So that's an acceptable confirmation candle closing time. Rule number 3 is met. Rule number 4, we got to go to the reassurance template. So let's change templates. We're on May 16th. Crap, I just jacked up. Hold on. Let me find May 16th again on this example. There we go. All right. So on the reassurance template, since we're looking to sell, the 200 moving average, which is, remember, that's the gold one, has to be under the 400, which is the red one. And we're good on that. So the 200 is under the red because we're looking to sell. That's a-okay. Let me go back to my main template here. And then the last thing we do is we just look to enter the trade. So let's actually see, where did that candle, here we go. Just highlighting this one more time for you. We're right here. Here's our confirmation candle right here. So when that candle closed, I'm just going to draw a line there. We were there. So when I go back down to the 15-minute time frame, this is where we would have entered the trade above the 50 EMA. And then you could have caught, let's see, on that day, you could have caught 250 pips. That's a big trade. You actually could have held that trade. If I go back to the H1 chart, you see we could have held this trade for a day or two. I mean, you could have caught over 500 pips just holding the trade if you're a swing trader. That was a really good entry. All right, so we're going to be looking right here in this area. So the first rule, we got to break a sharp area of support or resistance. So I'm going to go ahead and draw a line here at the bottom of this candle body because this is a sharp area of support. And then H1 came and broke and closed past that sharp area because, of course, you see it closed past our line. Then rule number 2, it retraced, it came up and closed shortly past the 10 EMA. At the same time that happened, here's our RSI 5 poking his head above the 50 level, leaving the Ehlers Fisher behind. The Ehlers Fisher had to stay down here. So that's rule number 2. We're good. Rule number 3. What time did this confirmation Pika 10 candle happen? This one happened at 17 chart time. That's going to be equivalent to 9 a.m. my time. That is an acceptable hour for the candle to happen. Rule number 3 is now met. Now we got to go to the reassurance chart and check on our moving averages. So this is October 7th. So let me go ahead and find October 7th and do that. All right. So as you can see, because I think we're here, right here, and you see the 200, the gold line is under the 400 like it needs to be. So we're good. That's all you got to check on that template. But that is an extremely important thing to check. Trust me. All right. So back to the what's the name? The main template. You go ahead and you enter that trade right here above the gold line, and you would have caught upwards of, there's 70 pips. There's about 140 pips if you would have held on to the trade for a while. So again, there's another really good example, and you notice there's not much drawdown at all. Zero on some of these, really, depending on where you get in. You're pretty much going to be immediately in profit with this particular setup if you take it correctly. All right, so what I want to do now is actually show you an example of something that you would not want to trade. This right here is an example. Looking inside this box, we've got a sharp area of support right here. So we would have marked this at the bottom of this candle. We would have marked that H1 closed past it. So that's rule number 1. It then came up and retraced. It closed shortly past the 10 EMA right here. At the same time that happened, we had our RSI 5 above the 50 level because we would have looked at this like a sell. But it came up above the 50 level, leaving the Ehlers Fisher behind. Cool. It happened at the proper time of day because this was at 17 chart time, which was at 9 a.m. So right at the end of our acceptable times, but it was the proper time of day. The reassurance template, I'm not even going to go there because that's not what I'm trying to show you. What I'm trying to show you is the last rule. Enter the trade when M15 grabs the 50 EMA, except when M15 is coming out of the band. So if I go down to the 15-minute time frame, we were on May 16th. Notice M15 is coming from where? Down in the bands. It surpassed the bands, and then it came up, and this is where you technically would have entered a sell and you would have lost because that rule was not met. That's what I'm talking about when I say if M15 is coming from the bands. Before it retraces up to where you want to enter, if it's retracing from out of the bands, do not take that trade. So that's just something I want to throw out there. Okay, so now I actually want to show you an example of what I call Pika 10 2.0. The rules are very similar. If you notice now, I just switched the check sheet to the Pika 10 2.0 rules. They're very similar, but there's one, you don't have to worry about the reassurance template. So you don't have to change templates and check that 4th rule that you did on the previous one. That's out the window on this one. So it makes this one, in my opinion, a little bit easier. And I actually like catching these better than the original Pika 10 strategy. But where's that example? It was in April. Here it is. Okay. Here's one I caught that I do remember. I actually did catch this trade back then when this one happened. So let's start going through the rules again. So here, oops, let me draw a box so you know where we're looking. My bad. All right. So first rule, you want to breach this sharp area of support right here. So there's a sharp area of support, and price then came and closed past that and broke it. Cool. There's rule number one. Then it came up and it closed shortly past the 10 EMA. Now this one, I mean, it's right at the halfway mark. You could kind of argue it's a little bit above the halfway mark, but I'm not being too anal about that. To me, I'm just like, that's right at the half. So I'm gonna go ahead and count that as still being closing shortly past the 10 EMA. But notice it closed past the 10 EMA between the 144 and the 50 EMAs. This gold and that purple. And that's the difference. So if you look at rule number 4 on this, you see it says the confirmation candle will close in between the 50 and the 144 EMAs. That is a very big difference versus the other examples we looked at, because in those, it definitely didn't close in between the EMAs. When that happens, you do not need to go to the reassurance template and make sure that the 200 SMA is on the right side of the 400 SMA. Like, you don't have to do all that. All you do on this one, you get the close pat. You get rule number 1 met. It's going to come up and close up in here. You still want the RSI and the Ehlers Fisher to do the right thing, like we talked about on the previous one. But once you got all that and it happens at the right time of day, which this one happened at, let's see, let's double check that. This one happened at 14 chart time, which is 7 a.m. So, yep, we good. That's it. You're just taking the trade at that point. So this one, let me take this line. I'm going to borrow this line I used. And so that's where the H1 confirmation candle closed. So you just go ahead and just take that trade. Where were we on the 25th? Yes. So right here, that's where it closed. So you would have had, you would have got in right here. You would have had 5.5 pips of drawdown. And then it would have took off. You could have caught 80 pips that day, or you could have held it a little bit longer into the next day and caught over 100 pips on that move or whatnot. But the other thing that you don't have to worry about is that whole rule about the if it's coming out of the bands, it doesn't matter on this trade. I've taken one like this where M15 came out of the bands. It did not. It doesn't matter. So again, you don't have to worry about going to the reassurance chart, and you don't have to worry about if M15 is coming out the bands. This is a much simpler setup to take, the 2.0 version. Let me show you another one. It's on Euro CAD. It was back in March. Let me scroll on. Sorry, guys. Let's see. It was on March, towards the end of March somewhere. Here it is right here in my face. All right. Now this one, you have let me draw a box so you know where we're looking. Here's our sharp area of support. Now it's ugly, but it's there. You can even take this one right here, quite frankly, and count that. And then we'll just say price closed past that. It then came up, it closed shortly past the 50 EMA in between the 50 and the 144 moving averages. It's in between these moving averages. So that means we don't have to go to the reinsurance chart. We don't have to worry about if prices coming out the bands. Matter of fact, let me just check something. March 24th. Make sure I'm in the right spot. Yeah. So as a matter of fact, this one was coming out the bands. So this is a perfect example. See, price was coming out of the bands before it came up and got to our entry area, and it didn't matter. So we're good. But anyway, so it went ahead and it closed past that. At the same time, the RSI 5 was above the 50 level, leaving the Ehlers Fisher behind. So rule number 2 was met. It happened at the proper time of day because it happened at 15 chart time. That's 8 a.m. We're good. And then that's it. You take the trade. So I'm going to borrow this line. So remember, with this strategy, as soon as price closes, that confirmation candle closes, you're entering the trade 9 times out of 10. So on March 24th, That's where it closed. You enter. It's just above the 50 EMA. You go ahead and take that entry. If you get out that day, you could have caught a little bit over 50 pips. You could have held that trade as a swing trade a little bit and caught upwards of about 90 pips on that trade. So that's a couple of examples of the Pika 10 2.0 version, which again, I like that better than the original version, but I trade both of them for sure. But just study up on those and put whatever questions you have in the comment section, and I'll do my best to answer those. But until the next video, I'll holler at y'all next time.